Hi, this is Alessio. Hope you're well. In this video, I have a treat for you. We're going to talk about the 3 predictions, or 3 more predictions that I got badly wrong. You see, guys, while other chartists prefer to never mention any of the predictions they got wrong, what I like to do is actually revisit those predictions and explain actually what may have caused those predictions to have become wrong and what lessons we can learn from them. The important point is to learn some important lessons. That's what I like to do. And let me also say, we're all human beings. Definitely, we're always going to make some wrong predictions along the way, and it's all about probabilities anyway. So while it certainly sucks to get a prediction wrong, it feels terrible. It feels really gross. It feels a bit like this. Oh man, that sucks. But the fact is, look, it's going to happen from time to time. Let's go to prediction number 1. In 2014, I made a disastrous prediction that I said that the stock market was heavily overbought, heavily overvalued, and I predicted that there would be a major crash, a major potentially drop in the stock market in 2014.
Dude.
Because the stock market is heavily overvalued and overbought. Now, looking back on it, that of course was a disastrously wrong call. It was a terrible prediction.
That was a bad idea, man.
But what caused that to be wrong? Because the stock market continued to go higher, the markets continued to go rallying higher. So why did we get the prediction in 2014 wrong? The reason is I ignored 2 important factors that I should have been looking at the time. Take a look at this chart. This is the yield curve. The yield curve, when it becomes negative, when it becomes inverted, is a very important, powerful, and highly probable predictor of a recession or a market crash. Okay? So back in 2014, one of the reasons why I got my call wrong was because I probably ignored what I should have been looking at this chart, because there was no negative yield curve in 2014. There was a negative yield curve back in 2000 and also back in 2006, and usually a recession follows within a year afterwards. So this is the key factor we need to be looking at. Now we do have, just to let you know, we do have a 2019 negative yield curve. This is giving us a highly probable estimation of a recession within the next year or so, within the next 12 to 18 months. So one of the reasons, if we just leave this chart, guys, one of the reasons why my call in 2014 was probably wrong is I was focusing too much on overbought levels, overvalued levels. And what I should have been doing is looking at the yield curve and the PMI going below 50.
Savvy.
That's the first thing. Let's go to the prediction number 2 that I got wrong. Before we look at the chart, so prediction number 2 that I got wrong was this, that in last year in 2018, when Bitcoin dropped severely from 6,000 to 3,000, what happened was that Bitcoin made one initial low, and then it rallied, it kind of bounced, and I predicted actually it would be another retest of that low. The fact is, it did not do a retest. We can see from this chart. As we can see, in fact, Bitcoin never revisited or retested that low. Came close, but not quite. What does it teach us? Well, it teaches us we should be flexible, and that even if 80% of the time there's a retest of the low, 80 to 70% of the time there's usually a retest of previous lows. It didn't happen because that 20% probability that sometimes it doesn't do a retest happened for Bitcoin, unfortunately.
You're kidding me.
Let's go to prediction number 3, which is that back in 2016, when after the Brexit vote, there was a major drop, as we can see here from this next chart, and there was a drop in the stock market, the S&P, below the 200 moving average. You can see right there below the green line. So I predicted at the time that this was potentially a start of a major continuation to drop further lower. I predict actually there would be a further 20%, maybe even 25% drop in the market.
What are you doing, bro?
It didn't happen, and then it quickly bounced back, quickly bounced above the 200. As you can see there, major drop followed by a bounce. What does that mean? Just leave it for a chart. It means that the lesson we can learn from that chart is simply that whenever stock market goes below the 200 moving average and bounces back, that is a bullish signal. That's a key thing we need to remember. By the way, we haven't got everything wrong. We've got plenty of things right, by the way, as well. For example, a drop in Bitcoin this year, we got that right. Drop in gold this year, we got that right as well. The reversal, bullish reversal in the British pound, we got that right correctly as well. Bearish reversal in the dollar, that was actually correct here as well. So there's a lot of things you can see here. Actually, we got plenty of things right, as well as, for example, drop in British pound last year, bullish rally in gold this year, drop in Litecoin of this year, and drop in Tesla, and so many things. So a lot of things we got right as well.
Bravo.
Thanks very much. Hope this video helps, and bye for now.